Welcome to the future of sophisticated investing. If you have been watching the markets lately, you know the feeling of a roller coaster. But what if I told you there is now a way to potentially profit even when the market is falling and you do not need 50 lakh rupees to get started? Today, we are setting sail with a brand new concept called the Specialized Investment Fund, or simply the SIF. Think of it as a sturdy ship built to navigate the vast and sometimes unpredictable ocean of the market. It sits right between your traditional mutual funds and the high end portfolio management services. It is designed specifically for those who demand purpose, precision, and performance in their financial journey. And in this video, we are going to break down exactly how this works and why it might be the missing piece in your portfolio. Let's talk about reality. The market can often feel like a rickety roller coaster, especially when it moves in circles or turns bearish. While traditional mutual funds are excellent for long term growth, they have one major limitation. They are mostly what we call long only. This means they primarily make money when the markets go up. But what happens when the tracks get bumpy? For seasoned investors who want more than just plain vanilla equity exposure, the gap has always been a problem. On one side, you have a 500 rupee SIP, which is great for everyone. On the other side, you have a 50 lakh rupee PMS, which is a massive entry barrier for many. Until now, the SIF is here to fill that exact space. It offers strategic flexibility that was once only found in expensive alternative investment funds, but it keeps it all within a regulated mutual fund structure. With a minimum investment of 10 lakh rupees, it caters to the seasoned investor, someone who has outgrown basic funds but isn't quite ready for the high entry barriers of a PMS. The SIF provides access to niche strategies like sector rotation and active asset allocation. These are sophisticated tools that were once reserved only for the ultra wealthy, but now they are becoming accessible to you. Now, let's step inside the dashboard of an SIF to see how it actually works. The real magic gear here is the ability to take what we call unhedged short positions. In simple terms, the fund manager can use derivatives to bet that certain parts of the market will go down. They can do this for up to 25% of the portfolio. In a regular mutual fund, derivatives are mostly used as a shield to hide from risk. But in an SIF, the manager can use them as a sword. They can actively look for market downturns or sideways movements to aim for smoother risk adjusted returns. Whether it is an equity long short fund or a debt long short strategy, the goal is to capture value in both upward and downward price movement. It is about making the market work for you no matter which way the wind is blowing. To make this even simpler, think of an SIF like a high performance car equipped with magical shields. In a booming market, this car drives fast and keeps up with everyone else. But when the road gets slippery or starts moving in circles, those shields, which are the short positions and hedging strategies, deploy automatically to help protect your capital. This makes SIF funds particularly powerful in bearish or sideways markets. They have the potential to outperform traditional funds that simply have no way to profit when a stock price declines. It is about having a plan for the rain, not just the sunshine. Behind every SIF is a master craftsman. This is a professional fund manager who handles all the complex gear so you do not have to. They manage the costs, which are capped by SEBI at 2.25%, and they ensure the portfolio stays diversified. One of the biggest advantages here is tax efficiency. In a PMS, you might have to pay tax every single time the manager moves the stock. But with an SIF, it works just like a mutual fund. You generally only pay capital gains tax when you decide to sell your units, not every time the manager rebalances the internal portfolio. This allows your money to compound much more effectively over time. How SIF make money even when the market is not trending. Let me break down 4 smart strategies they use. First, cash future arbitrage and covered call. Opportunity comes when the price difference between cash and futures widens. Institutions buy in the cash market and sell in futures at the same time. As expiry comes closer, this gap converges and that difference becomes profit. In covered call, they simply hold stocks and sell call options to earn regular income. Second, fixed income. This works when investors want stability. They invest in bonds and debt instruments to earn fixed interest. It's mainly used during uncertain markets to protect capital and generate steady returns. Third, special situations. Opportunities arise during events like IPOs, buybacks, mergers, or index inclusion. These events create temporary mispricing or demand supply imbalance, and smart investors enter early to capture that move. And fourth, derivative strategies. Here, opportunity comes from volatility. If a big move is expected but direction is unclear, strategies like straddle or strangle are used. So whether market goes up or down, movement itself creates profit. So remember, markets don't just reward direction, they reward understanding of opportunity. Ultimately, choosing an SIF is about balancing logic and emotion. Logic tells us that these are powerful tools to complement your existing portfolio. They offer sophisticated strategies and great tax benefits. However, keep in mind that these are newer products and they do not have decades of track records yet. Seasoned investor with a 10 lakh rupee surplus and a higher risk appetite, the SIF might just be the compass you need to navigate the next market cycle. If you are ready to explore this horizon, you should consult with a professional to see if your risk profile and investment goals suit this strategy. If you want to know more about how this fits your personal financial plan, you can consult with us directly. We have placed the form in the description box below. Our consultant and AMFI SIF advisor will reach out to help you on your investment journey. Thank you for watching, and let's invest with precision.
Investing is not about luck. It is about strategy and timing.